Okay, now I want to demonstrate a correlation trade. You can see NQ at the top here and ES at the bottom. I identify an A+ setup. Why? Because both ES and NQ are reaching their resistance level at the same time. And there's a high distance between the levels. So to me, it's an A+ setup. According to the correlation methodology, NQ's resistance and ES resistance are equivalent levels. Remember this term, equivalent levels. So I'm entering here on both with 2 contracts. Regarding the profit targets, one possible profit target can be a support level, trigger point. But here's the thing. While ES has a support level down here, NQ doesn't. So I'll exit with one contract on ES when it reaches its trigger point support level, and I'll do it on NQ at the same time. To me, ES support level is a good profit target for NQ as well. So this is with one contract. In addition, I want to put another profit target closer. I identify an intraday support level on NQ and ES, intraday support levels created by both. I mark them, and I place the other profit target here for both. So first profit target is an intraday support level created by both together, and the second profit target will be ES trigger point support level. Now, look at this, guys. ES broke its resistance, turned into support, probably. NQ did the same. NQ is in a narrow zone, I would say, but I'll scalp here. I'm going to place a buy limit order here of ES support level, but I'll monitor NQ and see what it does. So I'm waiting for my limit order to get filled, and I'll probably exit the position of NQ's resistance. Okay, it's a bit confusing, but I'm sure you'll get this point. You see ES generated an intraday resistance level equivalent to NQ's trigger point resistance, so this was a good profit target to me. Now, here is the correlation indicator. The correlation indicator generates correlation signals for me, so I don't have to monitor the markets. You could see the short trade that I've taken, you could see the short correlation signal on the left here, and long signals here, and beautiful short signals here. Now let's focus on ES. You understand that the EG correlation indicator monitors the markets for me, aiming to spot equivalent lines. It identifies the reaction of two correlated assets when both are reaching a trigger point, automatically generating correlated signals for me ahead of time. Guys, the signals are generated ahead of time when the markets get close to the trigger points. That's the beauty of it. You can see how by its nature, the correlation methodology filters out weaker lines. This is also the beauty of it. Now, let's take it a step further and see a possible way to decrease the number of signals. ES and NQ highly correlate. Many signals can be generated off our trigger points. So my trick is to add another instrument like RTY. So I extended the EG correlation indicator to EG correlation multiple, which is capable of monitoring two instruments for me. For instance, NQ and RTY. So NQ and RTY are being monitored in the background to produce correlation signals for me on ES. Similarly, we can replace RTY with YM. So NQ and YM can be monitored to produce correlation signals on ES for me.